Married couples in India may now have something significant to look forward to in the Union Budget 2026. Well, that's because the Institute of Chartered Accountants of India, that is the ICAI, has proposed introducing optional joint taxation for spouses, a move that could bring major relief to married taxpayers. If adopted, this change could simplify income tax filing, reduce overall tax liabilities for many families, and make it easier to manage household finances. But there are challenges to this too. So what all does this joint taxation system propose? Well, let's find out. I am Shivangi and you're watching India TV. So first, let's understand what is the current tax system and how it compares to the proposed joint taxation. Currently, India's income tax system treats every individual separately. Each spouse files their own income tax return and gets separate exemptions, deductions, and tax slabs regardless of shared income or household expenses. ICAI's proposal aims to allow married couples to combine their incomes and file a single consolidated return, but in an optional system, so couples can still choose individual filing if it is more beneficial. This flexibility is designed to help both single earner and dual earner households. Under the proposed joint taxation system, married couples would have a nil tax rate for incomes up to Rs 8 lakh. For incomes between Rs 8 lakh and Rs 16 lakh, the tax rate would be 5%, while those earning Rs 16 to 24 lakh would pay 10%. The next bracket from 24 lakhs to 32 lakh would be taxed at 15%, and incomes between 32 and 40 lakh would face a 20% tax rate. For those earning Rs 40 lakh to 48 lakh, the tax would be 25%, and any income above Rs 48 lakh would be taxed at 30%. In addition, ICAI has suggested higher surcharge thresholds for joint fillers, that is up to Rs 1.5 crore combined income compared to Rs 50 lakh for single fillers. Now, dual salaried couples could also have separate standard deductions, ensuring fairness in the system. But why does joint taxation could be beneficial? Well, joint taxation could lower overall tax liability, especially for single earner families, and allow couples to better manage exemptions for home loans, medical insurance, and other deductions. Filing a single return would simplify compliance, while dual earner couples with modest incomes could gain additional relief. However, high-income dual-earner couples may see limited benefits as their combined income could push them into higher tax brackets. Now, there are also challenges in implementation. Now, while ICAI's proposal is promising, it comes with challenges. India's tax system is individual-focused, so structural changes will be needed. Clear rules are required for house property income, ATC investments, medical deductions, and other categories to prevent misuse. There is also a risk of tax avoidance if exemptions are doubled without guidelines. Additionally, high-income couples may see limited benefits as joint filing could push them into higher tax brackets. But you must know that countries such as the United States and Germany already allow married couples to file joint returns. Now, ICAI had proposed joint taxation before Budget 2025, but it was not accepted at that time. Therefore, now all eyes are on the Finance Minister Nirmala Sitharaman, who will present the Union Budget 2026 on February 1. If adopted, this measure could allow married couples to file together, optimize exemptions, and save more on taxes, making household tax planning much simpler. But what are your views? Do comment and let us know. And for more such videos, stay tuned with India TV.